Welcome, everybody, to the Chinchilla Pickin' Podcast. It is August 11th, 2024 at 2:14 p.m. As always, we hope to be entertaining, educational, and uplifting because we want everyone to make money. My name is David Underwood, and today I'm joined by Brandon Beaver. Brandon, I am very happy to have 2 weeks in a row now since we had that trouble with our IT situation there for about a month. So
Yeah, me too. Me too. Let's hope for smooth sailing from now on. We
we're
now have
going to we're going to switch up our software and stuff over the next couple months so that we don't have this going forward, but bear with us in the meantime.
we now have two lost episodes with Nick on them.
Yes, Nick Young, you've heard him before on us. We've recorded episodes of him as a guest speaker, and yet unfortunately he just we keep having trouble with those particular episodes. So sorry, Nick, I know you listening. Sorry. What's going on with you, Brandon? What's
And
going
what
on
a
with you?
wild week in the stock market it was this week. And I know volatility is the norm, right? That happens. That's not, but it's rare that you ever see the stock market sell off and then buy back up again for the exact same reason.
Yeah, so hold up. Before we get to that, because I want to talk about that. I do want to mention the volatility this week and everything that happened on. I know we try to only have like a minute or two of fluff, non-stock investment news, but I do want to talk about how on last week at this time, um, actually probably Saturday, a week and 8 days ago, Australia was all over social media saying that they were better than the United States at medals in the Olympics. And everybody was. And here we are. Olympics are over, and who's number one? That's all I really want to say. There is yes, you guys were leading for a brief moment, and you went all over social media, bashing the United States, and we ended up number one again. So I want to really just point that out there.
Did the basketball team win gold?
Yes, men and
Okay.
women.
All right. I saw that
So
Steph Curry went off.
so if you go by just gold medals, we tied with China. If you go by just gold medals. So then what do you do as a tiebreaker? You go by, okay, who had the most medals? Well, then United States won. Or if you go by who had the most silver medals, United States won. If you go by, you get so many points per medal, United States won. In every which way you do the medal count, United States ended up number one. But I just remember a week ago, all the countries were just on social media saying, oh, you guys aren't that great. You aren't that great. Here we are. Thank you. Done. Track and field came through to save the day. So, all right, now we can get to stock and investment news and talk about the market volatility.
Okay.
Sorry, I did my rant. I am done.
Yeah.
So, what do you think the reason was? Because I think there's more than one reason for the sell off and for the buyback. But
No,
go ahead.
I'm sure there was, but the major reason here at the very beginning was a bad jobs number. Bad jobs number's not good. Let's sell off the stock, the stocks. And then the reason to buy back in was, oh wait, bad jobs number. That means possibly better inflation and a rate cut. Let's buy back in.
So I think the jobs number played into it. It wasn't the only piece of the puzzle there that fit into that sell off at the beginning of the week. It was these earnings calls that I know you've heard, I've heard, many companies getting on saying, hey, we had a great second quarter, but our third quarter is going to be awful. You know, shipping's gone down. I've covered this on the last two podcasts. Well, I mean, sorry, last one if you're listening to what we got published. Shipping's gone down. Inventories are going to be lower in Q3. You have people watching the Fed rate. The Fed's coming out saying, I don't know, we're going to do a 50 basis point cut. You know, at most it's going to be 25. And that's not what the market wants. The market wants a 50 basis point cut now. They just keep asking for more and more and more. But the Fed has to hold the line here. And I think what you see is a battle between the market and the Fed, and investment banks are like, fine, we'll sell off the market because we've made tons of profit in the big ones, NVIDIA, Microsoft, Meta, Google, Alphabet. They've made a lot of profit off of these. They've done very well. They can sell off and still be profitable and then buy it back after they sell it off. They have no problem doing this. Tell me whether or not, Brandon, if they ask me to prove this, I can prove this very easily with what's out there on the internet right now on YouTube for about CNBC, Jim Cramer, and other people, how they manipulate the markets like this all the time.
Yeah, we did
I wouldn't put past them that they did this to put pressure on the Fed.
we've done a couple of shows exactly like on that shows that, and that you can go back, and there's one of the episodes somewhere, I don't know which one it is, you can hear Jim Cramer talking about manipulating the market, in particular in its early days, manipulating Apple because he knew that they weren't going to comment on it. So yeah, I mean, it wouldn't surprise me at all. It won't
because
surprise
BlackRock. What did BlackRock do? What did they do after Bitcoin dropped?
They bought up a bunch of it, didn't they?
They bought up a ton of it right at the bottom. This is a company that is worth how many trillions of dollars? What, 12, 13, 15? Somewhere around there? Trillions of dollars. That's like 4 Googles or 3 Apples or whatever you want to slice it, like 4 NVIDIAs. And they went ahead and the market tanked, and they went in and bought up all this Bitcoin at a low price, like 12,000 Bitcoins when it was at the bottom, and now it's up over 10,000 a coin since then. So you do the math in your head. That's what, almost $100 billion they made in less than a week.
Right.
This company just made $100 billion in less than 1 week. And if I'm doing I mean, 100 million. I'm sorry. I added too many zeros. 100 million still $100 million in less than 1 week off of one trade. I mean, give me a break. You're going to tell me there's nothing else behind this? I don't know, man.
Yeah, this is why, as a long-term investor, I really don't care about the day-to-day fluctuations, and even sometimes the week-to-week fluctuations of the prices of the stocks that I own, because I'm confident where I buy them, and I'm confident in the companies that I buy. So it doesn't bother me whatsoever, unless I'm looking for something to purchase. And I think that, I'm going to get a good value on something, and I can buy it and make, the market sort of, I can be the master of the market in that situation, right? Or if I'm looking at something and I think that, you know what, this is a very high valuation, something that I own, it's too high now. It's a valuation I might not see again for the next 5 to 10 years, and then I'll sell it. But anything that I'm planning on holding and going long on, I really, other than that, I don't care. I don't
So
care.
you see,
And I'm going to give you a good example here in a few minutes. We talk about earnings. I got a company that just that I particularly own that dropped 5% on earnings, and it's not bothering me whatsoever.
right?
So,
And we're going to get into that next, right? We're going to get into that very next. But I want to just, piggyback on what you just said there, man. And, 100% agree. I was just on StockTwits. I don't know why I was on there talking with people, but I was on there talking with people over the past few days, and I was saying the exact same thing. I was saying it doesn't matter if you have a long-term view of this company or a long-term view of what of the company I was commenting on. It doesn't matter about momentary ups and downs, because there are people on there who panic, and they have like the weak hands. As soon as something moves, oh, what are you gonna do? What are you gonna do? And it's like, calm down. Are you in this for the long term? Because if you are, then it doesn't matter. Why are you watching this every single day?
it is a symptom of somebody not knowing what they're doing.
Yes.
Don't know enough to not freak out, right? So if the stock moves in a way that they don't expect one day, then they're panicked and they're anxiety driven because they didn't do enough research to be confident in what they did in the first place and what they bought into.
Yep. Exactly. All right. Rules. Brandon and I get together 5 to 10 minutes before the show, and we tell each other what we're going to talk about. You hear the live discussion, the back and forth, the bicker and the banter right here on the show for you. Brandon, I want you to get into right away that companies that you wanted to cover about the drop.
Yeah. Well, let me just say this real quick. If you do find yourself jumping on StockTwits and you see somebody commented about a shooting double, triple star drop in the chart or something like that, and that
All the time.
and what you need to do is you need to take a step, and I'm serious about this, take a step away from the stocks for a little bit, read a few books and get to know what you're doing, and then come back to it and you realize that stuff doesn't matter. And the funny thing is that whales act like that a lot too.
Yeah.
That's why you take advantage of them.
Yep. And there are 2 different Chinchilla Pick and StockTwits handles, by the way. Brandon has one, I have the other. Mine does not have our logo, Brandon's does.
Yeah. 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 All right. So the company that I wanted to talk about, here's the company that I've been covering on the show periodically. Last quarter, they did not have such a good earnings report because of a charge off they had on Star in India that came back and swung the earnings to a loss. And I told you guys that I was going to give this company one more earnings report before I decided if I wanted to stay long on it. And it was Disney, right? And the earnings report came out. The stock did drop about 5%. And some analysts were calling it negative. Some were calling it a mixed bag because the parks division disappointed. That's not a surprise to me. It's really not a surprise to me. Of course, inflation's high. People are having trouble affording things right now, and the parks division's taking a hit. But that's going to be a short-term thing. That's not going to last forever. It's not. It's not. I mean, the Disney parks, they're investing $60 billion over the next 10 years, which was another hard pill to swallow for investors on the entertainment division. We saw over the last week a little bit about what that's going into. They're making a new villains area and their Disney theme parks, and people are excited about that. Look pretty cool. Go and check that out. I think it's probably on YouTube or maybe on the investor uh page for Disney. I can't remember which one I was watching that on, but so that's pretty cool. The earnings for the parks did disappoint, but let's get into it a little bit. Financial results overall, Disney swung to a profit of $2.62 billion in the quarter. This was compared to a $460 million loss last year. Revenue rose 3.7% to $23.16 billion. Adjusted earnings for forecast, Disney raised its full year growth forecast for adjusted earnings from 25% to 30%. That's good to me. 25 to 30% earnings. And I want to get into the price to earnings ratio a little bit here. I told you that for a stock that is in the midst of a turnaround, you wanted to see the price to earnings ratio dropping over time. 1 second, Dave. So we started probably 9 months ago when I was talking about this stock. We were around 90 of a price to earnings ratio that was high. When we had the bad earnings report, they swung to a loss. They were up to 122. So that was a really high earnings. It dropped there. I didn't like that. Back in June, they dropped back down to a 99 price to earnings ratio. After this earnings report, earnings were so good this time, now at 33. And I think you're going to continue to see this. The stock's only dropped. I'm down about 10% on it right now, but I'm planning on buying more this week. And I think you're going to see that price to earnings ratio drop a little bit more, but I don't think you're going to see more pressure on the stock price. And the reason is earnings are going higher. And that's what you wanted to see. That's what I wanted to see. That's why I'm happy. Dave, I think you had a comment. Go ahead.
Well, I mean, all right, yeah, you're hoping to see their earnings go higher, is what you're saying.
Yes.
You're hoping to see these investments pay off. So I had an article that was already in line here of that because they had their big what is it their convention, if you will,
Yeah.
the Walt Disney Experiences convention, everything, and the chairman Josh D'Amaro, he laid out his ambitious plan for the theme parks. And it goes more into what you were talking about. They have a new Avengers place, a new Avatar experience, a new Indiana Jones experience in different areas. But this is just getting rid of older areas and replacing them with these new ones, right?
Yeah, it's a new reason to go back for people.
Yes. But these announcements, here's a quote from the article here. It says, these announcements reveal how the company will begin $60 billion in capital investments, nearly doubling the spending over the next decade to improve attractions at its 12 parks and cruise lines. So they're putting the money into the parks and cruise lines. And you said, are they currently profitable in the parks and cruise lines, or are they
absolutely
negative?
Yeah, no, they've been well, so they were losing money for a little bit. But then they were profitable again this quarter, I think for the first time since 2022. But we're starting to see a good swing back as far as revenue increasing in parks and stuff. It's always been their strength.
Okay.
So,
well, I mean, so they're going to add 4 more cruise ships, is what they're starting to put money in because they feel like cruising is the way it's going. They've already invested $1.5 billion in Epic Games. That's if you're listening, you don't know, the Epic Games really has like Fortnite and Unreal Engine are some of the things that Epic Games is invested in there. And that's kind of another offshoot of where Disney wants to go, is kind of have like get the gaming side of the business, if you will. But I mean, you got to see these investments pay off.
Well, Disney's Dreamlight Valley's been hugely successful.
Yeah, so, but all right, but what about the cruise line? Those ships are expensive. Do we really see a future in cruises? Because I see a lot of social media posts right now about how bad cruises have gotten, and
You
people are
really
getting
think
tired
so?
of the
I
cruise
don't know,
industry.
but I mean, a lot of my buddies are going on cruises.
Really?
My parents went for the first time about 6 months ago. Never been on a cruise in their life. They're in their 60s.
Okay, never mind. I'm wrong. I'm wrong. Now.
Yeah.
I'm just I've been social media has me just narrowed down to you must not like cruises apparently.
Our buddy Tristan that listens to this podcast, he goes on them all the time.
Oh, nice. Maybe he could tell us if he would go on a Disney cruise though, because that's the question there.
Probably not. But well, I mean, he's got a daughter now. He's got a little girl, so he might. Who knows?
All right, all right.
Yeah.
But like this is not the first what do you call it company that produces entertainment media company that is venturing out and buying up gaming as well, because people see some profitability in that gaming. So yes, I'm bullish on their investments because they're making investments, but where's the cash coming from? That's my question. 60 billion is a lot. Where's that coming from?
They got enough. They've got enough coming in. They've got enough in earnings and all that stuff every year. Their debt to equity right now is a little high at about 30%. So I'm watching that a little bit, but I don't have any major concerns as far as debt or anything like that goes with this company. I think they're going to be just fine. Um, I
Well, it sounds like it's good debt, because we've
yeah.
always talked about on the show good debt versus bad debt.
Hey,
Bad
look,
debt is you're taking out loans or bonds in order to keep the company alive. Good debt is you're taking out a loan because you're expanding and buying a new warehouse or something.
a lot of people don't understand that or don't know, I think, that Disney owns Marvel now. They did it as about the 21st Century Fox deal. So Deadpool Wolverine, that was a
Yeah.
huge box office hit. We didn't see it in these numbers. That's going to be next quarter.
Yeah.
So that broke records. Inside Out 2, we did see in this report, and that was good. So we're going to continuously here, at least for the next 2 quarters, see their entertainment and film division is gonna keep with the high profits and the high revenue going right now. So that's good.
Yeah, but Disney Plus didn't do so well. There was bad ratings on their shows, such as what
What?
was it? The Star Wars one? What was that? See, I'm a Star Wars fan, and I didn't even watch one episode of it. I didn't even watch one episode of it, and I celebrate May the 4th every year. I
Okay.
didn't watch one episode because it was awful. I was like, no,
Well,
I'm not watching that.
the streaming okay, so Disney achieved its first ever streaming profit, benefiting from a robust movie lineup. That
It was because they bought Hulu. I'm going to interrupt you here. It's because they bought Hulu, and they
No, they
own
didn't.
Hulu,
They
and
haven't finished that
that's
yet.
part of the streaming profit.
Okay, but they still own 67% of it. They haven't finished the buyout yet.
But that's why they're profitable now. It's because of Hulu. It has nothing to do with Disney Plus original.
Look, no. The Disney Plus and its family, which includes the Star lineup now in India, they've got about 250 million subscribers. Hulu's got 50 million. And Hulu is only in the United States. You can't even access it if you're in another country.
No, I don't believe these numbers. I believe it's because of their purchases. They bought profitable companies, and now they're profitable, which is fine. But I want them to admit that.
So we got Disney Plus, Hulu, ESPN Plus, Star overseas, became profitable ahead of schedule, generated $47 million in operating income from $6.38 billion in revenue. So it is a low profit percentage here, but they were losing $1 billion a quarter like a year and a half ago on this.
Before they bought these purchases, before they made
they
bought profitable companies. The companies they bought were great. Are they going to run them into the ground is my point. Like, you bought a great product, okay, but keep that product great.
The stake that they have in Hulu right now is still the same stake they had in Hulu in 2019 and 2020. It's the same percentage.
No, it's not, because the
Yes, it is.
contract
They
was for
didn't finish
January of
it.
2024. The contract was for January 2024, where they added a bigger percentage, and Hulu
They
agreed to
didn't
sell
do
the
it.
whole company to it.
It hasn't finished yet because there's been arbitration and argument about value. So that's one thing that I'm going to get into here. And actually, that got pushed until possibly the beginning of next year because Comcast is saying that it's more expensive than what, or worth more than what Disney's trying to buy it for. And now they're having to hire an outside arbitrator to come in and look at the value and appraise the value of Hulu because Disney may owe $5 billion more dollars, which was another reason why the stock went down.
All right, man.
They
I
may or
didn't
may
think we're
not.
gonna. I didn't think we're gonna argue about Disney, but go ahead, continue.
So they may or may not owe $5 billion more dollars, and so people got like a little, scared about that and said, "You're gonna sell Disney," and it dropped 5%. Um, that was the reason, and I think the $60 billion of investments over the next 10 years, which to me shows confidence in the long-term growth of their experiences in park sector and their cruise lines. That's what it shows to me personally. Um, so yeah, Disney's quarterly streaming profit is significant. Since the launch of Disney Plus in November of 2019, they had lost over $11 billion due to streaming competition and rising content costs. They were losing $1 billion a quarter about a year and a half ago. Now it's profitable. That's positive.
But they keep raising the prices. How long are people going to stay with them?
There's going to be another price raise in October, and Bob Iger says it's justified by demand. So we'll find out. That's one thing I do want to look at too.
I only have I will say this: I only have Disney Plus because I have Hulu Live, and I need ESPN Plus because I watch college football in the fall. If they didn't make me take Disney Plus in the bundle, then I wouldn't have it.
So my girlfriend in the other room right now is playing Disney Dreamlight Valley, and she might have Disney Plus on the TV while I'm in here. So,
but you're a shareholder, so there you go.
Yeah, exactly. The film unit that includes the theatrical film releases that reported an income of $254 million. That's a turnaround from $112 million loss last year. So the film unit is the first profit since early 2022. I said parks. I was wrong about parks. Parks has been profitable continuously.
Yeah, and that's been the one criticism of Disney is that the parks are paying for these poor movies and these poor shows, and nobody wants to watch.
Yeah, and then they came out with a hit of Inside Out 2, and now they got Deadpool and Wolverine. I really want to see.
I think that's Ryan. That's Ryan Reynolds holding that up because Ryan Reynolds, when he did those string of Netflix movies, Netflix did well as well. So I think that the key here is if you get Ryan Reynolds to do something with your company, you're going to do well. That's Ryan Reynolds.
Yeah,
he's able to sell himself.
Yeah,
and his personality.
Deadpool appeared on stage for their convention. I couldn't tell if that was Ryan Reynolds or not. I couldn't tell.
Billy Crystal was there.
Yeah, I saw that.
Yep.
Man, Billy Crystal. That's
right.
Yeah, City Slickers. It was one of my favorite movies of all time, and the second
and it,
the best one. But, okay,
let's move on. I got more stuff I want to cover.
All
We're spending a lot of time on Disney here.
So Bob Iger said that he aims for fewer movies, higher quality standards, 2 huge hits. One of them will be on next quarterly earnings report. That's Deadpool. So strong results from the movie studios and legacy television business is actually compensated for the softness in the experiences division, which was the parks. I think we all kind of saw the parks weakness coming. That's why it didn't really surprise me. I did pay attention to Comcast's earnings. They own Universal Studios down in Florida, and they had a scary earnings report for Universal Studios. So I wasn't expecting parks for Disney very good. This was one of the first earnings reports in a very long time for me that I was actually a little nervous about because I was going to have to make a decision whether I was going to sell or hold, and I'm holding. So
I'm not buying.
You're not buying? I think nope. I would, but you that's fine if you want to wait for it to prove itself a little bit more.
You've convinced me in the past. You've convinced me on the show live by what you've said in the past, and I went ahead and bought, and I made money, and it was a great great move that you convinced me of. You're not convincing me this time. Everything you're saying, I'm just like, no.
I'm shooting where I think the duck is going to be. So
All
let's
right.
see if it gets there.
All right. I think they're making bad investments.
Really?
Yes.
Well, you just said like 5 minutes ago you thought they were good, I think.
No, I don't think the cruise
You were
lines. I
confident.
mean, we had an argument about the cruise lines where we disagreed. But maybe I'm just seeing the different information than you are. I think that's not. I mean, but if they see growth there, they see growth there. They look at numbers I don't see. So you know what I mean. As far as their parks and amusement parks, yes, they're usually not always they're usually profitable for them. But they're putting a lot of money into these parks to get these new experiences, and especially the Indiana Jones. Does anyone under 20 even watch an Indiana Jones movie?
No, but I do think that that probably is one of the things that's aimed at the parents. You know what I mean? You gotta add some stuff into the parents to make the parents want to come to.
Yeah, all right.
Indiana Jones makes me want to go. I'm 38 and I'm old.
Uh,
So
yeah. All right. Fair enough, man.
that's all I have on Disney. I mean, we can.
No, I'm not buying.
All right. But you do see the progress here, right? Yeah,
I see. Yes, I see the investments. I just don't think the investments are going to pay off.
okay.
That's what That's what I would be
But
concerned about because the
you
people
do,
are already starting to complain about the prices at the parks, and that you have to be super rich to get through the fast pass and get past all the lines and make it worthwhile. Otherwise, you're sitting in lines for hours, and it's just, I see complaint after complaint after complaint about the parks,
you've been
and
complaining about the price of the parks since I was like 5, though. And that's only because I remember when I was 5. I'm sure they were complaining prior to that. It hasn't really stopped people from filling up the parks in the past when the economy is doing well and people aren't feeling the pinch, which
yeah,
I
but
will
do you
happen again.
you're a bear. You don't think the economy is going to do well?
I'm not a bear over the long term, though. Right?
All
So if
right.
we're looking 10 to 20 years out, which I think they are, this isn't something that, like, they're looking to make money on and be incredibly spectacularly profitable tomorrow. And I don't even think they care about that. I think what they're looking at is let's make the investment so over the course of the next 50 years, we stay relevant.
We'll see. We'll see. Let's move on. We'll see.
Okay. All right.
What else you got?
That's it. That's it.
Oh, really?
But you can
Oh,
see the turnaround at least in the balance sheet. It's there. Pretty
yeah.
spectacular.
I can see the investments in there, and yes, they had two good movies of Inside Out 2 and Wolverine
Yeah.
and Deadpool and Wolverine. But I think that Deadpool and Wolverine's because people love Ryan Reynolds, and we're gonna see if they can make something else. You can't just
Yeah.
he can't keep doing Deadpool forever.
This isn't Larry Culp level of a turnaround that takes us all on a complete surprise and, with General Electric and makes it so like, they've turned around so fast and so quick and spectacularly. But this is a good turnaround on the company so far that they're showing.
Right. All right. Cool.
Larry
All right. Let
Culp
me.
spoiled me.
Larry Culp did spoil you. Yes.
Yes. Yes.
Yes. All right, so I want to talk about a couple of things here. I want to get first into Tesla, which they should be reporting this week, if I'm not mistaken. I could be mistaken on that. I know it's coming up, but Tesla. The headline is Tesla stops taking orders on their cheapest Cybertruck, and they offer only the 100,000 version now.
I disagree with that, and you're wrong.
Hey, I let you get into it first before I started disagreeing with you. So let me get into it for a minute here. All right. So the article goes in. Tesla stopped taking orders for the least expensive version of its Cybertruck, which priced at $61,000, while making the $100,000 version available for immediate order and delivery as soon as this month. Demand and supply for the Cybertruck are closely monitored. Elon Musk poured resources in the truck's development, plans to make 200,000 of them per year. As recently as October, Musk said that he had 1 million reservations for the truck. Some have indicated they're waiting for less expensive versions. but Guidehouse Insights say that there's demand is a lot less than 1 million. So far, the Cybertruck sold nearly 4,800 units in July. That's the best month yet, making it by far the best selling vehicle in the US, priced over $100,000. So if you're looking at a vehicle over $100,000, the Cybertruck is the number one selling vehicle in the United States. They've sold more than 16,000 so far. But sustaining this this selling might be difficult. Is what this article goes in further to say. Deliveries of the Cybertruck is kind of like we don't see really here where the delivery numbers coming in, which is where kind of a concern is. The website no longer offers the lower version. I covered that, and going into the higher cost with a higher mileage version. I'm not a buyer of Tesla right now. I've been very vocal about this the past couple of weeks, on Stock Twits, on here. I believe that when their big software announcement is going to come out this week, they're going to fall short, and that's why I'm not a buyer. If I didn't have the software announcement coming out this week and it was just this news and the earnings, I might be a buyer. But because of that software announcement, I'm really hesitant because I don't think they're going to come through with that. So I'm still bearish on Tesla. I have a sell recommendation if you're asking me for a recommendation. I would say definitely if you're profitable, get rid of it because it's going to drop. But that's just my thoughts. Brandon, any thoughts?
So if they do miss on that software announcement, then do you buy if it reaches a certain level? If it drops, is that
Yeah,
possible?
100%.
Okay.
Yeah, I'm looking I'm looking for a big drop of it because that was meant to be the big mover going forward. I'm looking for right now it's around $200 a share. I would say, below 170.
Okay.
Below 170 would be where I begin to look at it and say, all right, am I throwing some cash in here? Am I, is this what I want to do? So that's kind of where my head is on Tesla. But I just like reporting the news on it because everybody trades it, everybody talks about it, but there's a lot of opinions on it. Some people just don't like it because they don't like Elon Musk. And I think, if you're looking to make money in the market, Tesla has wild swings, so you're able to make a lot of money off of Tesla if you watch the macroeconomic events of the week. You can make good money off of day trading Tesla if you're smart about it, but it's very hard to do.
I'm not a big fan of that gray colored Cybertruck. Kind of reminds me a lot of the DeLorean from Back to the Future as far as the color goes. But
Yeah.
man, the matte black and now the glossy black are both out. Those are slick.
So as far as the Cybertruck, man, Nick had the best reply is that it looks like a warthog from Halo. And I was like, well, yeah. And if I ever bought one, I would paint it as a warthog from Halo and jump out in a Master Chief uniform.
That would be awesome.
Yeah. But yeah, no. So Tesla, that's my thought on it. What do you think, Brandon?
Yeah.
Buy, sell, neither, not interested.
I'm not interested right now.
Gotcha. All right.
If you already own it, then I would say hold it.
All right.
But,
I would say sell if you're profitable, but I could be wrong and you could miss out on big returns. So you never know. All right. Next one is some crypto news, right? Last week I said Bitcoin was a buy. It dropped and then right back up. BlackRock apparently agreed with me. Larry Fink's on my team, apparently. Hopefully he's listening again. This article came out today. It was on Bazinga. Actually, no, this article came out on the 7th. August 7th. But I found it interesting. And the headline reads, XRP, that's Ripple, outshines Bitcoin, Ethereum to become the biggest daily gainer after a judge imposes a $125 million penalty. You might be asking yourself, why is a judge imposing a $125 million penalty a tailwind for a cryptocurrency? Well, here's this whole story. This is one of a few different SEC lawsuits that Ripple has been working through for the past 8 to 9 years. And it's because Ripple was set up differently than the other cryptocurrencies. Ripple Labs was handed a $125 million fine by a federal judge a penalty far less than the 1.9 billion that the SEC was saying was seeking, right? So much less than what they thought. This is a 3.5-year-old legal battle in this one, and this one has finally come to an end. So after it came to an end, Ripple started to rip. Ripple started to really move up, and it passed the movement of Bitcoin. It broke out of the same pattern everybody does, which they follow Bitcoin and they follow the other ones. It moved on its own, which you don't see too much in cryptocurrency. The Judge Torres also banned Ripple from future violations of federal security laws. She stated that while she isn't making a judgment that Ripple has violated any laws, the company may well cross the line in a section referring to Ripple's on-demand liquidity offerings. So in response, Ripple, the cryptocurrency used by Ripple Labs, spiked 15.53%, emerging as the biggest daily gainer that day. Meanwhile, Bitcoin and Ethereum went down. So it was the first time it would just broke out of that pattern here. Why does this matter? Why do you even care about Ripple? Ripple has been pushing back against the hefty fine proposed by the SEC for like almost 4.5 years, like I said. And they've been saying that you would have just gave anybody else a $10 million civil penalty, but you're going for billions of dollars from us. This is not fair. You're treating us differently, which I actually agree with, that the SEC is treating cryptocurrencies and Ripple Labs differently. I believe Ripple Labs would have been worth the cryptocurrency would have been worth probably 15, 20 bucks a coin minimum by now, had the SEC not gone after them the way they have. Do I believe they're going to get to that point? No, because now there's other alternatives to Ripple, which is why I was bullish on it early in the year, but then I got out because I realized that, hey, there's too many other alternatives that are popping up. But Ripple is trying to expand, and Ripple Labs, the company, is trying to expand and have different other things to offer besides what they originally were just going after, such different product lines, if you will, than what they were actually just originally going after, which was cross-border transactions. And they are teamed up with major banks, JP Morgan, one of them. But now JP Morgan's creating their own system based off of that. So no thoughts, Brandon? Nothing on cryptocurrency? You don't have any thoughts?
I mean,
on crypto?
it's interesting that JP Morgan is getting involved with Ripple, but
They've been involved. So is a lot of other major banks, and a lot of countries have been involved with Ripple. It's the reason why most people have stayed out is due to the SEC lawsuits, and they thought that would just crush the company. But Ripple Labs, the company, which is separate from Ripple, the cryptocurrency, is like I said, they're doing better on these lawsuits than anybody ever thought. They're winning a few of them. So the SEC is not crushing the company with these lawsuits, and I believe Ripple is eventually going to see the end of these at some point in time. But I think it's too late for what that cryptocurrency could have been. I think the SEC's done its job and smashed it from ever getting to the value it should have been at.
gotcha. Yeah,
But
I'm not, I'm not really a crypto guy.
I know, but that's why I
Yeah.
cover it on the show, so that when people have questions, somebody's covered it.
Yeah.
But here, back to something that you do have a strong opinion on.
I'm surprised it's not on Robinhood.
It is Ripple.
It can't be traded on Robinhood. Only real-time market data is available.
Oh, there you go. Yeah, it can't be traded because of the SEC rules right now. So yeah. All right. Last one here is Bank of America CEO Brian Moynihan. We've all heard his name before. If you follow stock news, any stocks for any length of time, you've heard him make his opinion, the same as Jamie Dimon, about one thing or another. But Bank of America CEO says U.S. consumers could become discouraged unless rates drop soon. This came out today at around 1 p.m. through the Reuters headlines. Article goes on to say, if the U.S. Federal Reserve does not start cutting interest rates relatively soon, U.S. consumers could become dispirited, according to Brian Moynihan. At the end of July, Fed kept the Fed policy rate the same. Moynihan went on to say, they've told people rates probably aren't going to go up, but if they don't start taking them down relatively soon, you could see dispirit in the American consumer. Once the American consumer really starts going very negative, then it's hard to get them back. Moynihan pressed about Republican candidate Donald Trump's statement that presidents should have a say over Fed decisions, said people were free to give Federal Reserve Chair Jerome Powell advice, and it was then his job to decide what to do. But if you look around, here's a quote from him. If you look around the world's economies, you see where the central banks are independent and operate freely, and they tend to fare better than the ones that don't.
Absolutely.
I knew you would have a strong opinion about that. I knew you would. So you agree with Brian Moynihan here?
Yeah, they
Halfway,
do
at
need to
least.
be- well, I think that I don't really want the Federal Reserve in a sense. I really think it shouldn't exist. I think we should be doing a free market, but if we're going to have a Federal Reserve, it should be independent from politics. I don't think it even is here in the United States, because the president's the one who,
Appoints, nominates.
appoints the chairman of the Federal Reserve, and so they're beholden to that if they want to keep their jobs. But yeah, absolutely should be independent. It shouldn't be on a political whim.
Yeah, and so he's really pushing for a rate cut. I know a lot of other investment bank heads are pushing for rate cuts. I think, again, I said, they're putting a little too much pressure on here for a rate cut, which makes me question why.
It depends on what consumer they're talking about. If they're talking about people trying to go out and buy houses, two things need to happen for home buyers. It's either going to be interest rates that got to drop, or it's got to be the price of the house that's got to drop.
Well, I mean, is it that, or is it that they've got themselves into a particular position that we don't know about, and they're saying, "Hey, you need to cut rates." Wink,
I mean,
wink.
it's possible, but
You need to cut rates. Wink, wink. Come on, cut rates.
Interest rate cuts aren't going to help you when you're buying groceries. It's going to do the opposite thing.
All right. So, I mean, the only consumer that they're talking about is housing.
That's got to be it.
And housing is now finally starting to struggle.
Yeah.
So if they're concerned about the housing market, what happened to all the different credit positions and money and cash liquidity that they're meant to have on hand to counter that we put in place after 2008?
It's a good question.
I mean, we do those tests. They passed the last test.
Mm-hmm.
They even came out and said, "Look, we got more cash on hand than we need. Let us spend it. Let us invest it.
Let us grow."
Yeah, right. Let us grow. And so they're passing these tests. So I don't think they're worried about the housing market. But I just wonder why they're putting so much pressure on the Fed right now. I just see it everywhere.
They want their stocks to grow. They want the S&P 500 back at record highs. They want their investments to go higher.
Maybe.
It's not always the best thing for the overall economy.
Maybe.
But we'll see. We'll see.
We will see.
It does look like the Fed is being data dependent, which is good.
Which is what I like.
Yeah.
All right, let's go into the week ahead. I got a few things I want to call out in the week ahead for the earnings. You ready, Brandon? This is like where we do like a quick little lightning, like you get 10 seconds to talk about the company and then we move on to the next one. You ready?
Yeah.
All right, Monday. Nothing big going out Monday. I really don't see any big earnings coming out Monday, but Tuesday, Home Depot right away, man, coming out before the bell. And I'm definitely gonna look at that one because if the home housing market's going down, are people spending money at Home Depot in order to fix what they already have?
Well, Home Depot also has a lot of home builders that are their consumers. A lot of companies and Home Depot so if the home building market's down, then Home Depot is probably not going to fare as well as like a Lowe's.
Don't they separate that out though when they give their earnings? Like, hey, this is what we see from consumer and this is what we see from small businesses. Do they separate that out or not?
Yeah, but they do, but overall it still has an effect on their overall earnings.
Gotcha. One thing I'm gonna be looking for also on Tuesday is Hut 8 Mining. If you're wondering what is that, Dave, what are you talking about? Hut 8 Mining is a Bitcoin mining operation. I want to see what the Bitcoin halving event has done to their earnings. Now that you get less Bitcoin for every one that you go ahead and solve the equations on, are they continuing to make profit at the same rate? Are they continuing to get enough Bitcoin as they usually are? That's one I'm definitely going to be watching on Tuesday. And that's all before the bell. All right, let's go into Wednesday. Nothing big coming out. UBS Bank coming out before the bell. There's looking to finally have a positive quarter after buying up Credit Suisse and that whole fiasco. But now they're hoping to turn a positive way forward. So we'll see if they do that. Cisco's coming out. Cisco, one that I've completely complained about for years after years, but the last quarter they actually did report a good quarter and they did go up. So can they do that 2 quarters in a row? We'll find out. Maybe they can finally do it. Maybe. Let's see. A big one on Thursday. Walmart. Definitely want to see the profit margin out of Walmart here and what they're looking and how they're looking to grow their footprint, because I know they closed some stores and they're opening other stores, so they're kind of being very strategic about where they put stores nowadays. But the profit margin, what's their profit margin? I'm definitely gonna look at that. And then Alibaba for the state of China. What's that's a good, it's like an Amazon for China. Kind of see where the Chinese consumer is and see if that's going to trickle over to us over here.
Alibaba will be an interesting one. I don't want to say I disagree with you on Walmart's margins right now. I just want to make sure that the margins are holding. I'm more interested in volume for them.
Okay.
So as long as the margins are holding and they're not, dipping like super low, if we're not seeing like net profit margins, go lower, then I'm more interested in gross profit than anything with Walmart, because that's really their business strategy. So
Okay.
it's all about volume for them.
All right. What do you think the earnings estimate is for Alibaba?
I don't know.
According to Kiplinger, the current earnings estimate is $15 per share.
Is that year over year though? That does not sound like a quarter.
I know. That's why I'm like, Kiplinger must have something wrong here, because that sounds outrageous.
Yeah, that's got to be earnings for the fiscal year, is what I would think.
But that's what they say. It's out before the bell, so we'll
Okay.
see. We'll see what they report there. Be something to watch. But yeah, those are the big ones coming up. But yes, I'm definitely going to keep an eye on Walmart, and we may report that on our podcast next week.
Yeah,
Brandon,
it'd also be interesting to see if they've maintained or even grown their market share with people making $100,000 or more.
yeah, they do report that every quarter now, don't they? It's weird.
They talk about it a lot now because it's a big metric. It's something that it really didn't affect their business that much. That demographic of people weren't really shopping at Walmart until about 2022. We really started to see the effects of inflation. Then they had more people in that demographic shopping at in their stores than they ever had. And
well, I mean, $100,000 a year is not the same as it was back in like 2000.
this is true.
So
Yeah,
I mean, that could be why it's probably the same group of people. They just are making more money now.
well, I don't know. We'll see. I definitely think that's been an effect of inflation, but it's also been, in my opinion, a metric that you can point to Walmart and say the business model is working, and they're taking market share from luxury retailers.
Oh yeah, 100% believe that. And like I said, if I was going to buy a retailer, Walmart would be the one I would buy. And I've consistently said that. They do stock splits pretty often. I still like the company, but I say that, but then I don't buy.
Yeah, me
I don't
too.
own any stock. I don't buy it, but it's definitely one I like. So
Me too.
Brandon, final thoughts.
Oh, final thoughts. We talked a lot about price to earnings ratio. It is just one metric to use, but in a situation like Disney where you see it declining faster than the stock price was declining, that's always a good signal that you could possibly look at to go in and buy into a stock. Me and Dave were talking about Starbucks recently, just right before the show. I still own it. Still looking for a good turnaround there. Hopefully it happens. I'm a little concerned. Their future price to earnings ratio is higher than their trailing PE, which in a way shows that expected earnings deterioration. So that's one thing to look at too. When you're kind of comparing their price to earnings ratio, this future PE versus the trailing PE.
Hey, how do you feel about the two activist investors both taking stakes in it recently? Elliott Investment and the other one, what was it like Star or something? Starboard.
Yeah, I don't know. I'm kind of, let's give this new CEO, he hasn't had that much time on the job. So let's give him a little bit more of a shot at,
It's too late.
you know,
They already
seeing,
took their investments in it, so now they're
they
they're
did, but then you got, if they're going to get anybody else on the board of directors and such like that, that's got to go to the shareholders. And, just like it did with, Disney and then, activist investors, they were trying to fight off. So, I know Elliott Management. I don't mind them being a part of it. That's a little exciting, actually, in my opinion, because it'll force change at the company. I don't know the other company.
Gotcha.
I don't know them. So I don't know if they're like, vultures trying to circle around Starbucks and, eat it up and spit it out. I have no clue.
All right. Fair enough. What was your last point you were getting into?
I think that was it.
Okay.
That's all I had.
I'm going to get into a couple points here. So recently I sold Nova Nordis. Recently convinced my daughter to get out of Altria. She was invested in that. Pulled out some position a little bit back about Tesla when it was on this move up. And I pulled out of these positions, and then the companies typically have gone higher afterwards for a little bit. But I want to, here's the point I'm making is that I was profitable. I saw headwinds. I didn't like where it was at from it would change the situation changed from a microeconomic standpoint with the company from when I bought it to where it was at then. And so I sold those positions, and some of them have gone higher since I sold. Some haven't. Some have gone down, did exactly what I thought they would. But if you buy a company and you become profitable and you make money, and then all of a sudden things change, the fundamentals of the company change, the microeconomic values of the companies change. I mean, there's no reason why you can't sell. You don't need to hold on forever. If you feel the situation has changed, sell, move on.
Yeah, I think I might have to correct myself because I don't remember how I said it. If the future price to earnings ratio is higher than the trailing PE, than the trailing 12 months, that shows earnings deterioration. I think I may have said it the other way around.
No, you said it right.
Okay.
But yeah, and what Brandon's talking about, that's just one way you could look at a company going forward. Like if you see future PE ratios moving up higher, then yeah, you might want to take your profit, get off the table, and wait for an investment.
Yeah.
I've now been sitting on cash for what, 2 weeks?
Right.
It is, Brandon, since I texted in our group chat that I sold. So I've been sitting on cash for 2 weeks and I still haven't bought anything. And there's no rush for me. I'm waiting. I'm patient. I'm waiting for the right one. And maybe I divide it up. Maybe I divide it up among 3 or 4 different ones. We'll see. But I still haven't found anything worthwhile. Maybe if Tesla drops this week, like I think it will, part of my money goes there. So we'll see what happens. I'm taking a look at a lot of things. Maybe I buy Walmart before their earnings. Do a day trade. Who knows? That's a possible day trade for me if I really believe in that. So we'll see as things go on, but take your time. There's no reason to rush into anything is my point to our listeners. All right. As always, we hope we've been entertaining, educational, and uplifting because we want everyone to make money. Have a good night.
Have a good night.